6:30 p.m. only on Bloomberg Quint.
Hello and welcome. On the event of HCL Technologies announcing its first quarter earnings, I'm here at the HCL Technologies headquarters, and it just so happens that HCL Technologies has now moved forward and taken the number 3 position when it comes to the highest revenues by an Indian IT company. To talk a little more about the outlook as well as the quarter gone by, I'm in conversation with the CEO, Mr. C. Vijay Kumar, as well as Anil Chanana, the CFO of the company. Thank you guys for joining us. CVK, I'm going to start off with what you mentioned in the press conference about the infrastructure space. You've seen the highest bookings in this particular quarter. Of course, we'd like to know first a little more about the nature of the key deals and whether or not these are front-ended, which means can we start seeing them show up in your income statement immediately, or will it take some time? Can you tell us a little more about that?
Yeah, so as I mentioned, we had a very strong order booking last quarter. A significant part of that was driven by what we call as next-gen infrastructure offerings. The infrastructure space is changing quite dramatically. With the digital workplace, with experience becoming a very, very key theme in a lot of organizations, employee experience and productivity and all of that. Digital workplace with a very, very innovative solutions that we have, which are highly differentiated. So that's something which is helping us clock in some good deals.
Right.
On the core infrastructure, network, data center, there is a lot of modernization happening. While customers want to look at a hybrid cloud strategy, they're looking at the right workloads which could move into a public cloud, and the how do they really orchestrate and create a very flexible infrastructure even within their enterprise. And that's really what is driving the adoption of software-defined data centers, software-defined infrastructure, networks, and all the deals that we have won in the last quarter, most of them are on the modernization of the infrastructure and running them for 5 years and longer. So in terms of whether it will convert to revenues, some of the large deals generally take 4 to 6 months for it to convert into revenues, because there is a transition and then there is a lot of planning from a transformation perspective. After that, we go into steady state. So revenue conversion, there will be a lag of 4 to 6 months. In some very large deals, it takes up to 6 months. Smaller deals, 3 to 4 months, it will get done.
All right, so it's safe to assume that we'll start seeing incremental growth as we move into the next few quarters.
That's absolutely right.
All right. So CVK, you know, the other concern perhaps is coming through the dip that we've seen in the financial services vertical. FY18 saw about over 13% growth, 13.3% I'm reading here. And you guys were actually outperforming the entire industry when it comes to financial services. This time around, you have also said that there are some planned reductions in this particular vertical. Can you tell me a little more about whether or not, one, is this a blip and what we can expect going forward?
Yeah, see, financial services, if you look at our numbers from a year-on-year basis, we've grown 9%. So the momentum and our real success in financial services continues. This quarter, I mean, we had mentioned that there's going to be some renewals and planned reductions, and that's what you see as a reduction. But overall, we are very positive on financial services. We continue to see good deal momentum, not only in the next-gen services like Mode 2 and digital offerings, but there's a lot of core Mode 1 services as well, where we are seeing deals in the pipeline.
Right. Anil, obviously your margins were as per expectations, as per the street. We want to get a little more of an idea when it comes to how your wage hikes have come through, utilization levels, as well as the currency movement specifically. How have you seen that pan out for this particular quarter?
Sure. So in terms of wage hikes, I think our cycle starts with July. So it will have an effect on the July-September quarter. Okay, so it didn't. It had a very marginal, negligible impact so far as this particular quarter is concerned. So far as the currency is concerned, of course, the currency benefited, and then there are certain currencies which also appreciated.
Right.
I mean, the dollar appreciated against a lot of currencies, including Indian rupee. So we had a positive as well as a negative. And the benefit is we could absorb that C3I acquisition which we did, which had a low single-digit EBIT margin, very well into the system from a EBIT perspective, as well as continued with our investment program.
Sure.
So it helped us. Yeah.
Okay. And the other question was, we're seeing a lot of head of states, in this case specifically US and China, talk about trade wars that will have an impact on currency. Secondly, in India itself, it's an election year. Once again, we tend to see very sharp swings in the currency. Can you tell us a little more about the hedging policy that you plan to take in this specific year perhaps, and how that could pan out, and is it a possibility that could endanger your guidance on margins?
So we have a well articulated, layered hedging policy.
Right.
And this policy is now in effect for many years, and it has consistently delivered results in many economic situations and otherwise.
Okay.
So we do believe we will continue to stick to that policy, and we don't see any risk to our margins.
All right.
Because of the policy which we are following.
So irrespective of wherever the currency goes, it should be.
We don't.
Okay. Okay. CVK, the other thing which I noticed in this case, of course, and I'm sure everyone who's noticed, is that substantial growth in Mode 2 and Mode 3. Is that going to be the key driver so as for you guys to meet your guidance for this year? Or is it still early days for these two?
I think Mode 2 and Mode 3 will continue to grow. I think our biggest growth drivers are going to be in Mode 2 and 3.
Right.
However, Mode 1 is still 74% of our business. So given the deal momentum and the wins, Mode 1 also has a lot of new things, like the next-gen infrastructure stack. Digital workplace is all in Mode 1.
Right.
And modernized infrastructure, data center, refresh, all of that is there. And our engineering services is also seeing a good momentum in terms of ramp-ups of some of the deals that we had won. So I think the growth is going to be quite balanced, but of course Mode 2 and 3 will grow much faster.
All right. Also a word on your technology and life sciences vertical, which has again shown tremendous strength. While we have seen that strength come through in the previous few quarters as well, my question really is, can we see HCL sustain this strength as we move in? Or do you think that it'll be a little moderate, the strength will be there, but it'll be a little moderate?
Yeah, I just want to point out that in life sciences, some of the growth this quarter specifically is because of the C3I acquisition.
Okay.
Otherwise,
right.
Life sciences is still a good growth momentum for us. It contributes to 13% of our revenues, and
right.
It should grow better than company average, I think.
Okay. Anil, you did announce a buyback this time around as well. We just like to know if this is the kind of capital allocation that we can expect in the next 1 or 2 years as well. That's one. And if you could also tell us a little more about the timelines as far as this buyback is concerned.
Sure. So far as this buyback is concerned, the process has already set in motion, and I think it takes 3 to 4 months in order to complete it.
Okay.
So we have already started taking. We have gone for the shareholders' approval, since it's in excess of 10% of the paid up capital of the company. So I think we are on time in order to complete it. So far as the policy in terms of payout is concerned, so we have stated a policy that 50% of the net income we will be paying out to our shareholders. I'm glad to report that in the last 12 months we have delivered something like 54% of the net income we have paid out to the shareholders, and it's close to something like 70% plus of the in terms of the cash flow from free cash flows. So both ways we are in a very good sort of a situation.
Okay. And CVK, finally, as the lower level jobs start getting automated, do you see that the rate of hiring eventually will start decreasing for HCL Technologies over the next few years?
I think it's, automation definitely causes some amount of change in the nature of workforce that we will have. So instead of a traditional pyramid model, we think it's going to be more diamond shaped. And we have a very strong reskilling program.
Right.
where we are able to pick young engineers and drive them to get certified on various areas, including on-the-job work. I think it's just the skill profile is going to shift. I do think the hiring trends, at least what we have seen in our business in the last couple of years, would continue.
Okay. Well, gentlemen, it was a pleasure speaking with you.